Welcome everyone to another market analysis, the 9th of September 2025. It's been a busy week. Going to explain what happened, what's about to happen potentially, and how do we position ourselves correctly and make money off of this. So let's get right into it. Right off the bat, if you watched my previous videos, you'll know that inflation was a huge problem in the US facing the Fed. We saw the Bitcoin decline from the 123k levels all the way down to the 113k levels. We also saw decline in other risk assets. Any other risk asset that can come to mind saw a decline, and the reason for this decline was actually simple, because the huge spike in PPI, producer price index, which measures inflation for factories and businesses. So as you guys can see, the jump from the June numbers to July numbers is huge. We basically went up by almost 1%. So yeah, this was the narrative for the Fed. The Fed was fixated and focused on keeping inflation under control. So trying to reduce interest rate was criminal. They couldn't afford to do that. And if you know that the Fed main job is to keep inflation and employment under control. They have a dual mandate, basically like a dual mission, to make sure everyone gets jobs, make sure prices are stable, which is related to inflation. So if we want Bitcoin to go up, we need the interest rates to go down. If they go down, people do not invest their money in government bonds, and they invest their money in risk assets such as stocks, Bitcoin, etc. Okay, so what happened? First of all, the first thing that happened is a new policy shift. The Federal Reserve is removing the old framework they used to follow, which is called the FAIT, Flexible Average Inflation Targeting. This simply put that the Federal Reserve was okay letting inflation go out of control if it was low in a previous period of time. So they were okay with letting inflation overshoot the 2% target or undershoot the 2% target. But now they were like, we gotta go back to the basics. We're done with the strategy that we followed in 2020 due to COVID. We're getting rid of this. So yeah, avoiding the makeup policy by removing the average component, the Fed is no longer bound to a specific makeup policy. Now it's only going to aim for 2%. Okay, this is number one. Bear with me. Second thing is, since the Fed, we know that the Fed is focused on inflation control, but they're also focused on keeping employment in check. They want employment to be high. They want everyone to have jobs. But recently, the Fed has been having bigger problems. One of these problems is the horrible job numbers they've been getting recently. The NFP is an economical indicator that comes out every month that measures the amount of jobs added or lost in an economy. And as you guys can see, we've been losing a lot of jobs. Not a lot of job creation is happening. The August numbers were awful, like borderline awful. 22k jobs added. A lot of jobs lost. So this indicates that maybe interest rates are too high. Maybe we need to lower interest rates so people can borrow money, okay, start businesses, and create job opportunities for people so we can like get better numbers. This is what's going on right now. This is the policy shift. This is what the Fed is focused on right now. They focused too much on inflation and they neglected the employment. As you guys can remember, it's a scale. Everything has to be even. They neglected the employment part and they were too focused on inflation, too scared about inflation. Powell was too scared about inflation, especially when it comes to tariffs. He was like, okay, If I lower interest rates now, inflation is gonna go out of control, which it did actually. Like without even him lowering without him lowering interest rates, the PPI numbers shot up like crazy. But they gotta react right now, and they gotta react quick before the job market collapses completely in the US. So this is literally what's going on right now in the US in the markets. So what's the play right now? The play right now is that the market is pricing in a possibility of a double cut. What is a double cut? We know if the Federal Reserve cuts interest rates one time, it's a 0.25%, a 0.25%, 25 basis points. Now there is a possibility of a 0.5%, 50 basis points. Okay, so the current range is 4.25 to 4.5. There is a possibility of like almost 10% that we might get a double cut. My bets are on we're going to get a single cut, but we gotta have to wait and see. I mean, we don't have much time left. The next meeting is in the 17th of September. If we go to the calendar and we see how many events we got left till the 17th, we have another inflation indicator, core inflation rate. So, yeah. And we have to eye down the press conference. I'm probably going to do another market analysis explaining what happened in this press conference. But that's basically what's going on. The market is getting cuts. This is very bullish for risk assets such as Bitcoin. As you guys can see, I'm bullish on Bitcoin at the moment. It's already like going up. It's not waiting for me. But my prediction for Bitcoin is there is a huge possibility that we'll break all-time highs, especially if we get that double cut. I think we can easily reach like the 130k levels, especially if we get that double cut. But we will definitely go back to the all-time highs again. This is hopefully is gonna sound like a relief to the everyone that's holding crypto, everyone that's holding Bitcoin, unless some crazy stuff happens. But high probability risk assets are going to rally even further than they are. We can see here that the dollar is already bleeding. It's already going down. The US 10-year yield, the interest rates on government bonds, it's already going down, as you guys can see here. Also, there is one graph I wanted to show, which is the average inflation, the break-even inflation. As you guys can see here, the break-even inflation rate, without explaining what this indicator is, just think about it like the inflation, the average inflation for the next 10 years, simply put, is 2.3%, which is not too far away from the Fed target, which is 2%. So the Federal Reserve right now has bigger problems. They're not too focused on inflation. They need to focus on employment. That's basically what's going on. I'm long risk assets. It's a risk on environment. Hope you guys enjoyed the video. It was a quick analysis. I'm kind of tired. And if anything happens after the press conference, I'm probably going to have to do another analysis. If you guys like the video, just like the usual, like, sub, share this video with other people that trade. Maybe they can get into some early positions. And yeah, man, catch you guys in the next one. Bye-bye.